Alrighty. Good afternoon, everyone. Good morning, depending on, I guess, the part of the world that you are calling in from today. Today's show is just going to be me. I think Mike is taking his nephew to the airport. And, what I want to start off with here today is I'd like to just run through a couple of news items. Maybe we can take a look at my X feed, see what's going on there. I'm just going to go ahead and mute a couple of different topics here so that we can, you can see what it is that, comes through on my X feed here. I think that that's probably a good place to start. So I'm going to just hop in and share my screen, and we're going to take a look at this. Now, what's on my feed, I just muted all the politics stuff. We're only going to be taking a look at AI and crypto. AI, crypto, DeFi. That's it. So let's hop in, because I've actually got what I think is some pretty interesting stuff on my X feed every single day here. I'm going to share system audio also, and then that way we'll be able to talk through some of these topics. I'm going to go ahead and move my window over here, and then that way I'm going to bring the X feed into view so that I can see this a little bit more easily. Okie dokie, let's do it. So add to stage. All right. Now I don't have, I'm not paying for X, so I'm going to continue to get these stupid ads, but let me just mute that. Won't let me mute it. Okay. So, I get a lot of, posts on my feed about AI, and for good reason, because there's so much that we can do with local AI now. It used to be that, the AI that you had on your machine was kind of shitty. Like, it wasn't very good. But now that's not the case. Now, like the AI that you can have on your machine, you can have frontier level models on your local device, which is just, I think, absolutely amazing. Now, here's the thing, though. You know how people like to quote unquote flex on others by buying a really nice car, or buying a gold watch, or a diamond watch, or a gold chain, or designer clothes, like these gaudy, extravagant signs of wealth that people like to put out there to say to others, hey, I've made some money. Or maybe they haven't, maybe it's all borrowed, who knows. But I think that in the future, what people are going to do when they want to show ostentatious wealth is they're going to show their server rack with 2 terabytes of VRAM, because like that's the sign of wealth now. If you've got a server rack with 2 terabytes of VRAM, then all of these different loops, let me see if I can zoom into this so we can see this maybe a little bit more clearly here. So if you've got a server rack with all this video RAM, VRAM, it might not even stand for video, it's just VRAM. Then all of a sudden you can run any of these frontier models directly from your local, from where you are, rather than having to dial into a cloud somewhere and pay API call fees to be able to run this stuff. You can just do it from directly, sitting in your desk, sitting in your chair at your home. So what is this? What are we taking a look at this? This is just one of the guys that I follow. Definitely, this guy is worth a follow if you care about, AI and machine learning and algorithmic trading. This guy, Tom Dorr, excellent. He posts about GitHub repos. So, what even is a GitHub repo? Does anyone who's watching, want me to? I'll go ahead and explain. So, a GitHub repo is essentially a repository for a code base. Now, you can use it as a repository for text, for video, for images, for a code base, for anything you want, really. And it allows, if you are the project manager, let's say that you're building a piece of software, it allows you to have people who work for you. You can collaborate on the same code base together. So it's called, PRs and merging. So if you have a pull or push request, you would create a separate branch. So think of a branch. You've got your main branch. That main branch, that's what's deployed to production. So production is what we all see. So if you're building a piece of software and that software is in production, then it's, for the public. It's for the public to be able to see that, right? Anyone can see or use that piece of software because it's in production. That would be the main branch. Now, let's say that I want to update a feature on that piece of software. I want to create a brand new feature. That would be, a side branch. So you would create that branch, that new feature, that side branch, and then if you wanted to merge that side branch to the main branch and take it to production, well, then you could do that. You would have to pass the software merging would have to pass some tests. Once it does that, so that it doesn't break anything, it gets merged to production. Sometimes it breaks things anyway. So GitHub repos are essentially where you can get open source software for anything you can dream up. So, what the AI revolution has really done is it's democratized the ability to create software. So anyone who has an idea for literally anything now can create that piece of software. So like something that I've been building, Runway, my trading software, I'm building that with GLM 5.2. And because of, these AI models, I'm now able to build state-of-the-art software, like sitting right here at my local machine. It's amazing. So this guy, Tom Dorr, great GitHub repos, and not all of them are going to be phenomenally good, but this is just an example of one of the guys that I follow. Excellent content creator here over on X. So let's just go ahead and scroll down and see what's going on. Al goes with a sense of humor. Okay, so this is another account definitely worth a follow. This is Zero Hedge. So Zero Hedge is one of the most popular, I guess you could call it a finance website. It's zerohedge.com. A lot of political content on there. If that's going to make you uncomfortable, just scroll past it. The finance content on there is top notch because this guy, I think he's a Brit. I think he's a Brit expat. But this guy, he goes by the pseudonym, what's Mr. Durden, Tyler Durden? Yeah, from the movie Fight Club. So this is, Brad Pitt's avatar here. Zerohedge.com is the website. And what we're taking a look at here is the Kospi. So the Kospi is that's the South Korean stock index. And today, the Kospi had a little bit of a boo-boo. So the Kospi today, I think it ended the session down 10%. And, we can see that if we hop on over here to my trading view. Let me just go ahead and change what I'm sharing here. I want to share my trading view so that we can see. You know what? I'm just going to share the entire window. I think that'll be a lot easier. And I don't want to share audio too. Okay, here we go. So here's trading view, right? So this is the Kospi, and let me just throw down some trend line support. Now, look at this is a parabola. Okay, this is the South Korean stock market going straight up and to the right. Now, why? Well, because of all the memory producers. You got Samsung. It's basically all the chips producers. So if we measure this from April 2025, that was the tariff tantrum low. The Kospi is up 300% from trough to peak. And today it's down 10%. And so everyone's freaking out because, the South Korean stock market is down 10% and it's made up mostly of chips manufacturers. But, this is not the first time it's done this. And for it to give back some of this froth. So I've been reading about the Kospi quite a bit, and it's basically just, retail traders on massive leverage. So, just bidding up these stocks because the order books, for these companies are booked out for years into the future because there's no one who's capable of producing this DRAM and VRAM, which is a requirement for these AI models to function. You need, terabytes of VRAM, and computers need, gigs and gigs of DRAM to make these AI models work. And just ask yourself this question, though. Just like, the dark fiber build out in the late 90s into 2000, where everyone thought that we needed all of this, fiber capacity, which ended up laying the groundwork for cheap broadband internet in the early and mid 2000s. Now we've got all of this, demand for DRAM and VRAM. What happens when the AI models no longer require a terabyte of VRAM to function? The frontier models. What happens when one of these labs creates a frontier model that requires 8 gigs of VRAM, which is like orders of magnitude less than what's required now today. So what happens when that becomes a reality? Well, all of a sudden, you won't need to buy trillions of dollars or tens of billions or hundreds of billions of dollars of RAM. So all these companies, Micron, which is the one that we're going to dig into today, we're going to take a look at some deep dive research on Micron today. This is one of the chips manufacturers. This is a memory manufacturer. The likes of Micron and SanDisk, you won't need to buy chips from these guys in the same quantities that you might think that you need to buy them now. So just wanted to point that out, that the Kospi, which made it into my news feed today because it basically was just selling off by 10%. Just because it sold off by 10% does not mean that something's broken. You really just gotta think to yourself, hey, it was up 300%, and it looks like my trading view doesn't want to share the screen now. So let me see if I can get this thing to work. It's not. It's refusing. It's refusing to share the screen. Wow, what a piece of shit software this is. This trading view or this StreamYard thing just crashes a lot. So I might have to end the stream so that I can share my fucking screen. What the hell, man? So yeah, it's just failing. The share screen button isn't working at all. Let me. It's completely frozen. Wow. Okay. So so basically what happened is my StreamYard stopped working. So that's the streaming software that I use. Very happy to see though that the stream continued on and that the stream didn't end. That's so interesting to me. Awesome. So now that I'm back, let's go ahead and I want to bring it back to news items. And to do that, I've got to be able to share my screen. And look at that. What do you know? It's allowing me to share my screen. Amazing. Here we go. So we're going to take a look at this. Let's hop into this. And thanks so much for bearing with me through the technical difficulties there. Probably need to end up sharing the right screen though, right? Not the incorrect screen. There we go. So here's X. Perfect. Great. Got it. Awesome. Okay. So let's. We were taking a look at the Kospi. This is the South Korean stock index. This one, was down 10%. And you know what? What do you guys think about me putting some, maybe not today, but in the future, having some type of background music during the stream really low, like something really, really low in the background, like some ambient music, just so that it's not, maybe so that I have something to listen to too. Okay. So, this guy, Crypto Rover, definitely worth a follow. He's a multimillionaire trader, young guy, very successful. And I follow his TA. He does an excellent job, I think. So definitely worthwhile following Crypto Rover. And he's just talking about the Kospi, down 10%. The Nikkei, that's the Japanese 225, the top 225 stocks in Japan, down only 3.5%. Shanghai and Shenzhen. So the Chinese indexes were up a lot yesterday. And so they're giving some of it back. And Hang Seng, that's another Chinese index, off 2%. So, Asia, APAC, that region, off significantly today. You can see the bloodbath in South Korea. But, as we were looking at, Frequency Atomic for sure. Yes, on the music, 100%, man. But what we were looking at with the Kospi, it's up 300% over the last, not even 14 months. So yeah, great. It's up 300%. So for it to give back 10% is really not that big of a deal. And also the amount of leverage that has accumulated over there in South Korean stocks, similar to what we've got over here too. Now, Rand Group, this is one of the accounts that I get information from. An interesting account, I'd say. This guy posts some pretty valuable stuff, and I'm actually going to go ahead and follow this guy. And follow this guy too. So Solana Labs. So, here's the thing though. You've really got to take this with a grain of salt. So what is it that we're looking at? Solana Labs. So Solana leads RWA holders. So this is just showing us the number of wallets holding tokenized real world assets by network. Now, what exactly does this mean though? Does this mean that Solana and Plume Network are leading Ethereum in RWAs? And what even is an RWA? Well, RWAs are stocks, on-chain treasuries. Basically that's the vast majority of what's been tokenized so far. The real world assets that have been tokenized is treasuries, so bonds and stocks. So it would make sense that there are a lot of, Solana wallet holders who also own RWAs. So think like X stocks on Camino. In fact, we could take a look at that just real quick. So, X stocks on Camino, if we go on over here to Camino.finance, this is I think this is the largest money market. And I think that Jupiter's money market on Solana is the number 2 here. But if we take a look over here at borrow, this borrow tab, and let me just zoom in here so we can all see this a little bit better. And then you see this X stocks. This is the X stocks market. So if I'm operating on the Solana network and I swap my SOL or my USDC for TSLA, Tesla X. This is, just tokenized Tesla stock. So, or SPYX, that's tokenized S&P 500, the ETF. QQQ, that's the NASDAQ. So this is tokenized NASDAQ shares. So it would make sense to me that there are a lot of RWA holders on Solana, simply because, Solana is a retail chain. It's a retail-facing chain. And, that means if someone wants to own, $100 of Tesla stock, you can do that on Solana quite easily using Camino. I'm sure that Jupiter has tokenized stocks too. It's just really easy and straightforward to, gain exposure to real world assets in the form of stocks on Solana. Now, Plume Network, I know that there are people that are bullish on this, but I can't figure out why. And then all of these holders of RWAs on Plume, this has to be tokenized stocks and bonds. So I have never used Plume natively. So why don't we take a look at that? Let's hop on over to DeFi Llama. And over here on DeFi Llama, what we're looking for is the Plume network. So in the search bar up here, I'm just going to type in Plume, and then I'm looking for Plume, the mainnet. You see where it says chain right here? I'm looking for Plume mainnet. And this looks like a piece of shit. Look at that TVL falling off a cliff. And then if we scroll down here, it's got this Nest Credit protocol, which I think Nest Credit is native to Plume. It's also got Centrifuge protocol. So it's got all of these protocols that, operate on Plume, but I'm not convinced that they are all native to Plume. And so why is this important? Well, if we take a look over here, you've got to be able to, distinguish truth from fiction. And look, if you see a chart that says Solana leads RWA holders, well, maybe, verify, don't trust. This is coming from Rand Group Research and RWA.xyz. So if Plume has 250,000 wallets holding RWAs, where? Where? On what protocol? On Nest Credit? Are you telling me that there are 250,000 people holding tokenized bonds on Plume on Nest Credit or on Centrifuge or on Grove? I don't think so. I doubt it. I sincerely doubt it. So yeah, I take this with a grain of salt, right? So I call bullshit on the Plume number here. On Solana, I could believe that there are, a little bit over 250,000 wallets holding tokenized stocks on Solana because it's a retail chain. But also, I'd be willing to bet that the value of what those wallets are holding is probably less than $100 each. Very, very low value. So I think that Ethereum is when it comes to public-facing DeFi, Ethereum is the king of RWAs, and it's not even close. Ethereum and its layer twos, that's the king of RWAs. So whenever you see charts like this, you've really got to dig in because most of it's bullshit. Most of these pieces of research are just extremely misleading. So let's continue on. Here's Vitalik. So Vitalik, I love Ethereum. The cypherpunk ethos of freedom and sovereignty and privacy, I love that. These guys are weird though. They're really weird, man. So, and I don't like the centralized control. So let's just read this together. So this is coming from Vitalik Buterin. So he says, this year, the Ethereum Foundation is decreasing its budget by roughly 40%, which entails some difficult decisions. So we've been, learning a lot recently about all of the exits of, important people, contributors from the Ethereum Foundation. And, is that bullish or not? Well, I think that there's a case to be made that it is bullish. There's also a case to be made that it's not. The case to be made that it is bullish is, there's a new director in town for the Ethereum Foundation. He put out that Ethereum manifesto, that new manifesto, which was the writing in that manifesto was very cypherpunk-ish, which isn't in and of itself a bad thing. But the culture that they overlaid on top of that is just like weird as hell. Like I don't get the anime, it's like anime porn. It's fucking weird. But yeah, so the manifesto itself, though, like the written copy, not bad. Let's get back to Vitalik. The goal of the decreases was set out in the Treasury Management Policy last year. The Ethereum Foundation is transitioning into being a long-term oriented, endowment-based organization, shifting from its pre-2026 average of spending 15% of its remaining funds each year toward a post-2030 target of 5% per year. Okay. And, so Vitalik is, writing a fucking novel here. It's like, dude, can't you just sum it up in a paragraph? Like, okay, he says the past years have been a challenging era for Ethereum. However, the ecosystem is adapting both inside the Ethereum Foundation and outside, and I am confident that Ethereum is very well positioned to succeed and thrive. Well, I mean, maybe, I certainly hope so, but for anyone who's ever operated on the Ethereum mainnet and then compared that to operating on Solana, or honestly any of the competitors, any of the layer 1 competitors, they're all faster and cheaper. Like operating on ETH mainnet is slow and expensive, and it always has been. And even with the upgrades, it's still stupid slow and stupid expensive. So he's got to fix that. That's his job. Get to work, dude. I don't care about your manifesto shit. I care about my user experience and the safety of my assets on the chain that you built. So make it fast, make it cheap, and make it so that there's value capture for the token. You think that Ethereum holders like holding ETH and it just goes sideways? No, they don't. Look at this. Let's zoom out to a weekly. So when Vitalik Buterin says that it's been a challenging last couple of years for Ethereum holders, no shit. Dude, so if we take a look, if you had bought Ethereum in February of 2021, that was the 2 bull markets ago. We're talking about, greater than 5 years ago. If you had bought back then, you would be flat. You've made nothing. A lot of volatility. It's put in a double top, but performance-wise, dog shit. So, Vitalik, what are you doing, man? People hold ETH because they want to make money, not for some cypherpunk ethos of, freedom and liberty and sovereignty and privacy. Those things are amazing, and I love that. But dude, you got to make money at the end of the day. So miss me with this stupid bullshit novel that you write on X, bro, and, get your shit together and make ETH work. And stop being such a weirdo with this hentai porn in your fucking Ethereum Foundation manifesto. I don't want to see that shit, man. So yeah, that's my rant on Ethereum Foundation and Mr. Buterin. Let's take a look at this. SpaceX. SpaceX giving the middle finger to a lot of retail investors. So basically, if you didn't buy SpaceX within 5 minutes of the IPO launch, you're underwater. Okay, and that's a problem for markets as a whole because this thing is huge. It's huge. It's huge. So check this out. This is the weekly. Okay, let's zoom in to the daily. Now, here's the IPO, up and down. I'm pretty sure that's what Tesla did right after its respective IPO back in the day. So, let's just see if we can see. Let's zoom out in time and take a look and see what did Tesla do after its IPO. I think, yeah, Wispy, I agree with you, dude. Just the weirdness. Dude, we buy Ethereum because we want number go up, okay? We're not buying ETH for, I think most people aren't buying ETH for any other reason than that. So dude, fix your tokenomics and fix the layer 1 so that it makes people money. And, so here's Tesla after the IPO, similar type of pattern, pump and dump. And then I'm pretty sure Tesla, and this is split adjusted. So I'm just going to zoom out here. So actually, you know what? It seems like it performed quite well. Not seems like, it did perform quite well. So, pump, dump, and then move sideways. But, the problem for SpaceX, though, is the valuation. Like, this valuation is stratospheric. This is like a 1 point something trillion dollar market cap. And yet they've generated, I think, last year, 20 billion in revenues. So what are we talking about? Like 100x price to sales? Like, what? Like, this is not good, And then if we're actually going to end up getting the OpenAI and Anthropic, IPOs at some point this year, their numbers are even worse. So yeah, extremely expensive. And it wouldn't surprise me if, the SpaceX stock sells off a little bit. But I think it's going to be one of the most valuable corporations in the history of all mankind, though, simply because, the only way it makes sense to run data centers is in space. Building them on the ground just doesn't make sense. And so am I frozen here, or is Mike frozen? Because I see him spinning on the thing. So not quite sure, whose internet connection is breaking out here. If anyone wants to let me know in the chat, I'd appreciate it. I'm just going to continue on going through my X feed here. So this guy, Tom Dorr, again. Now look, I get a ton of, AI and crypto stuff, and it looks like Mike is hopping in twice. There we go. So I see you, Mike. There you are, man. It looks like you're driving. Can you hear me? Mike, can you hear me or no? Yeah, SpaceX does need to go down a little bit wispy. Yeah?
I can hear you, but my connection's bad. I just wanted to dial in and apologize. My power, like right as I was about to hit go live, the power went out. Like literally, it was like 3, 2, 1. I went to go hit the button and the power went out.
All good, man. All good. We're just running through my X feed, running through some news, taking a look at some assets here, and talking shit about Vitalik. So I'm just going to go ahead and remove you there. All right. So back to the X feed. This is interesting stuff to me. So these chains, there's been a lot of hullabaloo around how much these chains have raised and how poorly they've performed. So, Barachain, if anyone remembers Barachain, like, what type of name is that, man? No one wants to be on the Barachain. Like, you want to be on the bull chain.
It's the chain that ended up failing and folding up shop.
Yeah, exactly. So did they actually officially fold up shop? Did they finally do that?
I believe so, because Jeff was like actually doing airdrop farming with them, and got a bit of an airdrop, and then they folded up shop, so it basically ended up being worth nothing.
Oh, okay. So I think maybe that was for a particular protocol, because the Barrett chain itself has not shut down. It's still got 57 million in TVL. But if we're just taking a look at the protocol rankings here, like these protocols on Barachain, the only one that's worth anything is Dolomite and maybe Royco, maybe. But that's it. There's nothing going on in this chain. This was a huge pump and dump, a ton of incentives here, and it failed. So, they raised $150 million, though. Now, how much have they made in the last day, according to this poster here on X? $21. Now, I'd be willing to bet that, Barachain's made a little bit more than that, but probably not much more than that. You take a look at Celestia, TIA. This one, last bull was touted as, we're going to integrate with every chain, yada, yada, yada. They raised 9 figures, $100 million, and, big goose egg in terms of revenue. Eclipse, I don't even know what the hell that is. I'm pretty sure this is a layer 2, an Ethereum EVM layer 2, raised $65 million. They've made no money. Sonic, this was a rebrand and relaunch of Phantom. Phantom was a chain, back years and years ago. and it was basically like a scam airdrop farming and yield farming chain called Phantom. And then they raised $60 million to rebrand into another scam chain that they called Sonic, with the same type of, incentive mechanisms. And, it failed again. Scroll, SEI, these chains all just, have blown up. So we don't need, 1,000 layer 2 chains. It's just unnecessary. We don't need 1,000 layer 1 chains. You got to ask yourself, what happened during the browser wars of the 90s and the operating system wars of the 1980s? It was winner take most. So I think the expectation moving forward should be that most chains fail. I'm looking at you, Solana. like this, most chains I think are going to fail because there isn't product market fit. There really isn't a use case. I think we're going to end up with like 3 or 4. Okay, so let's check this out. Getting ads here. Myths of so quant science. This is a great account to follow. If you're a trader, an algorithmic trader, an aspiring algorithmic trader, follow quant science. This guy puts out some great content. And I'm not going to spend a whole lot of time here, but definitely worthwhile reading through some of the content that Quant Science posts on X. This is a new one. I haven't come across Venus in a while. This is talking about a computer science professor at Stanford. So let's see here. I gotta say, when I see these so-called Ivy League institutions. I know Stanford may not be part of the Ivy League officially, but these institutions are communist now, and they're communist DEI institutions. And so what that means is the quality of their curricula, the quality of their, what they put out now is much, much lower than what it was 20 years ago. These institutions are trading on their name now. They're trading on their clout. And that's bullshit, So whenever I see Stanford, I just think woke bullshit. And so also when I see a white female in a computer science class as a professor, I think, well, is that DEI? Like, is she there by merit? Because, women have different interests than men do. So it would make a hell of a lot more sense to me for that to be a man teaching this class rather than a female. Okay. So I just what the fuck is she even talking about? All right. I'm going to pass on Stanford and the woke DEI bullshit. And in fact, I'm just going to go ahead and mute this account because I'm just not interested in that type of crap. I want merit. I don't want this. I don't want stupid bullshit. All right, let's continue on. Wall Street is repeat. This is again from Crypto Rover. So, there are parallels between the AI bubble and the .com bubble. No doubt about it. Now, what people are going to want to say is that, and Wispy, or am I saying that I think Solana will fail? I don't think so. But I just don't see the product market fit for Solana. It's still a casino. It's basically still a meme coin casino, and it's super centralized. Not as centralized as Sui is, but I'm struggling to see the product market fit, especially with Canton. Canton is just mopping up all that institutional TVL, and Ethereum is taking care of the vast majority of the public DeFi TVL. And then Tron is like USDT payments and remittances in Southeast Asia and South America. Hyperliquid is the derivatives chain. Where does Solana fit in? What's the use case for Solana? Why do you need Solana? Struggling to see that. And Sui, just a piece of shit chain. It's piece of shit VC chain, Sui is. But, over here, Crypto Rover, the AI bubble this year in 2026, the hyperscalers, there's 4 of them. we're talking about, and let me just go ahead and bring up a chart here. So we're talking about 4 companies that are driving the vast majority of returns for the market. It's Google. This is one of the hyperscalers. Google got that 200-day moving average coming in at $310. You got Amazon, another one of the hyperscalers here, and it's sitting at its respective 200-day moving average. You got Meta, and I can't tell what Meta's AI strategy is. I don't think they really have one, because they haven't shipped any products that are worth a fuck. Like, can you tell me one AI product from Meta that you use? No, you can't, because they haven't shipped one that's worth anything. I think maybe, do they have something to do with Olama? But that's open source. How do they make money on that? And then Microsoft, of course. Microsoft AI products is basically like their stake in OpenAI. And dude, OpenAI's got some problems, because these Chinese models, they're going to eat OpenAI and Anthropic's lunch. Those model providers, OpenAI and Anthropic, GLM 5.2 is better than Opus 4.8 and probably on par with Fable 5. So if we just hop on over here, and take a look maybe at Z.ai. This is Zipoo. So this is the Chinese model provider here. Now I want to just see if I can, instead of taking a look at the API, what I'd like to do is take a look instead just at like their website, but maybe we don't need to do that. So take a look at the quality of the outputs here from this model are so good. They definitely rival, the other frontier models. And this thing is open source. So this is just an example of the type of, websites that you can build with this model. This is beautiful. And you can build this basically for free, very, very cheap. So this is just absolutely gorgeous. The way that this is built. I got to copy this. Oh, man. So I think I just found my new website here. I'm definitely going to be taking this here and using it to upgrade one of the businesses that I built. So yeah, man, this looks great. But you gotta just think, like, all of those AI model providers, OpenAI and Anthropic, like, they're valued at $1 trillion each. Why? How much revenue do they generate? It's like, what, 20 billion, maybe 30 billion? Like, how do you get to $1 trillion valuation on 20 billion in revenues? And like, those revenues are under attack if a Chinese lab can drop a model that is better than the frontier models from OpenAI and Anthropic, and basically free. So it's open source. And that means that the Chinese models are open source. And so that means that you can run them locally on your own hardware. If you've got the hardware, you can do that for free. So you don't have to pay any cloud subscription to OpenAI or Anthropic ever again if you've just got the hardware to be able to run it. And the hardware to be able to run it is extremely expensive right now. But you can run one of them. You don't have to run a frontier model. Like, you don't need to use Fable 5 to build most of what you want to build. You can use Quen 3.6, or something like that. It's another Chinese open weight model. These things are open source. So, when we take a look at the .com bubble and the eventual crash and the AI bubble now, like, there are really good reasons to be comparing these two. One of the best reasons to compare them is what we're getting out of chips, the semiconductors. So SMH, pretty soon, this is the semis, the semiconductor index. So SMH, pretty soon, SMH is going to stand for shaking my head, because this thing is going to come back down to earth. No doubt about it. And we're getting earnings tomorrow from Micron. So, this is going to be like, and look at Micron. This is the big DRAM producer. And yeah, I mean, look, you need memory for all of these machines to be able to run AI. You need memory. But when you see order backlogs stretching out 2 or 3 years, that's a pretty good incentive for a lot of other manufacturers to get into the game and start making their own memory, right? What happens when some Chinese company decides that it wants to flood the market with cheap DRAM? It's going to undercut the pricing of Micron and SanDisk and Samsung. And yeah, that's going to be no bueno for these American chip manufacturers. So there's good reason to compare the dot-com bubble to the AI bubble of today. Now, Quinton, this guy, definitely worth a follow on X. And I'm seeing more and more cycle bottom indicators. So for Bitcoin, I mean. So when I take a look at Bitcoin supply in loss, this has been a reliable cycle bottom indicator going back over the last several Bitcoin cycles. So basically dating back to 2019. The problem with these Bitcoin cycles is that even though they have held true, we have very few actual data points. We've basically got, we're on our fourth cycle. So, that's not exactly a large sample size, which means that it's less statistically significant. But you see the same pattern repeating over and over again. You should take heed. And now that we're seeing Bitcoin supply in loss hit the same levels that it hit during other Bitcoin bear market bottoms, I think that we're pretty darn close to the end of the Bitcoin bear market, but likely that won't come until Q4. So what does that mean? If the Bitcoin bear market isn't over until Q4 of this year, well, then that means we've likely got more downside ahead for Bitcoin. So I think 50K is going to be the cycle bottom. I think 49, 50K is going to be the bottom for Bitcoin. I think it's going to happen this year by Q4. And so what does that mean for MicroStrategy, right? So MicroStrategy is sitting at, you see this level of support here? I just want to clean this chart up so that we can see this a little bit more clearly. So you see this level of support. Let me just zoom in so we can all see this chart here. So number one, this is a really ugly pattern out of MicroStrategy. It looks almost like a head and shoulders, but not quite, because the head is not quite clear. You could say this is the left shoulder, this is the head, this is the right shoulder. I don't think that it's really a clean head and shoulders pattern though. But what I do see is this horizontal level of support. So with MicroStrategy at 105, the level of support comes in at 103. If that fails and MicroStrategy breaks down below that level of support, which I expect it to do, well, then it's going to move at least 30% to the downside from here. So think $75 for MicroStrategy. And the stretch product is, just clinging. The stretch product is having a tough go of it. It looks like it's going to carve out some type of a bottom down here within this tail. So between $82 and $88, it might carve out a bottom here. And I certainly hope so. But, this is not looking too hot for Mr. Saylor. He's got plenty of Bitcoin, though, that he can sell. He's got plenty of cash, too. So those products aren't going to default. But, it's going to be an ugly and painful next couple of months through the end of this year for MicroStrategy and stretch holders, likely. Okay, so let's see here. Not familiar with this account, so I'm going to pass on this one. Algorithm, I'm going to pass on this. All right, and which one is this? Oh, wow. So synthetics, okay, they're SUSD depegged from $1 to 25 cents. So, you see what this poster is saying? How can you lose money on a stablecoin? So you got to understand what these products are. SUSDE, or I don't even know what SUSD is. This is not SUSDE. This is just SUSD. Oh, synthetics. This is synthetics, quote unquote, stablecoin product. So just keep in mind, everyone, when you're looking at these quote unquote stables, unless they're backed by treasuries and cash, they're not stables, okay? So USDT and USDC are backed by treasuries and cash. USDS is much, much more complex. USDE and SUSDE are algorithmic. They're basically wrapped representations of what an underlying business produces in cash flow, pegged to one arbitrarily. Okay, that's not a stable coin. That's just a complex financial product. So you got to understand what you're buying when you hold these stables. That really sucks for this guy, for his 10K to be worth 2,500 overnight. You got to understand these stablecoin products before you go piling into them. Cybersecurity books, look, it's always worthwhile to educate yourself. And I think that, being up on your P's and Q's when it comes to cybersecurity is an important thing. I'm going to bookmark this for myself to return to this later. And let's see here. ETH Labs, 5 former Ethereum Foundation researchers just launched ETH Labs, a nonprofit R&D lab for Ethereum. Cool. Awesome. Nonprofit R&D lab for Ethereum and ETH. This is cool. I'm going to bookmark this, no doubt. Starbucks coffee, $7. No, thank you. Pass on that shit. Okay, let's take a look at AI XBT for a second, because you've got to take what this account says with a grain of salt. This account is a bot, and because it's a bot, it does a really good job of scouring X and other sources of information to, cobble together different data points, but it's not a human. So it doesn't think. It's an illusion of thinking. And it's wrong in most posts. So most of its posts, it's wrong. So let's just take a look at this, though. It's talking about Thorchain. What is Thorchain? So Thorchain, if we take a look over here at Rune, so Rune is the native token for Thorchain. And this is, this one suffered exploit after exploit, hack after hack. It's basically used to permissionlessly swap between like Bitcoin, Ethereum, and Monero. So if you want to get into a privacy coin, you can do that using Thorchain. The way that it works is quite a bit different than the way that, I think a superior product like, if we take a look at Near with their, the permissionless layer 1 swaps, Near intents are far superior to Thorchain. So the way the Thorchain works is if you've got spot Bitcoin and you want to swap that for spot Monero, first you're going to use this basically liquidity pool that Thorchain runs, with Rune. So you're going to take your spot Bitcoin, it's going to be swapped for Rune, and then that Rune is going to be swapped for Monero, and then you receive the Monero. So I think that is an inferior mechanism compared to Near intents. So intents are atomic swaps, and Rune Thorchain uses basically like a liquidity pool. So yeah, I think Near intents are superior. But let's read about what AI XBT has to say about Thorchain. So he's saying the Thorchain charging 50 basis points on privacy coin swaps, which is 5 times their standard fee. Monero has a $2.8 billion market cap with 0 tier 1 exchange access since the 2023 delistings. So yeah, you got to just ask yourself, where can I swap into Monero? Because Monero got delisted from all those tier 1 exchanges because Monero is a privacy coin. So if you want to privately hold assets that can't be stolen from you, can't be taxed, that's what you do with Monero. If you want to move value privately and securely without being, surveilled, that's what you use Monero for. And governments don't like that because they want to know who owns what asset and where so that they can tax you and steal. That's basically it. All the AML, KYC shit, it's just about theft. That's all it's about. It's not about protecting anyone. It's just so that they can steal from you. So that's why Monero got delisted from these exchanges, because the exchanges, if they want to continue to operate in, jurisdictions around the world that have these crazy onerous, KYC AML restrictions, then, they've got to comply. Otherwise, they're going to have men with guns, coming to their offices to, shut down their servers. So it's basically coercion by force. And, these tier 1 exchanges delisted Monero as a result of that. And yet it didn't kill Monero. In fact, Monero grew and became stronger. Monero's hash rate is sitting at an all-time high according to AI XBT, while its price is sitting 80% below its 2021 peaks. Yes, that is true. I don't think that the peaks were in 2021 though. So let's just take a look at Monero. Its peak, its peak was not in 2021. So in 2021, maybe it's talking about hash rate, not price. So in May 2021, price hit $521 for Monero. So I think, they're talking about hash rate, not price, because the price all-time high was recently. I think it was early this year or late last year. So we're talking about Thorchain or Monero now, a committed mining base, no liquidity infrastructure. All right. Monero integration targeting Q3 2026. Oh, so Thorchain targeting a Monero integration. I think that already happened. Didn't that already happen? So if we hop on over here, how do we find out? If we go on over here to DeFi Llama, we type in Thorchain. We're looking for the chain. Okay, so here's Thorchain, and then I want the website. So here's the Thorchain DEX. This is the decentralized exchange. Here's the Thorchain DEX. I'm going to go ahead and click Launch App here. And if I want to sell Bitcoin for XMR, okay, it's not live yet. Got it. Not live yet. I thought that it was. It's not. But you can swap into Monero permissionlessly and privately using near intents. So Thorchain's behind the 8 ball here. And we're talking about XMR again. So if even 10% of holders want to rotate into Bitcoin or stables without KYC, see, that's the thing. If you've got Monero and you want to buy Bitcoin, you shouldn't have to, be under the thumb of some onerous jurisdiction somewhere. So that's the value that Thorchain provides. And they're talking about, that's $280 million in potential swap volume flowing through the only protocol technically capable of handling opaque transaction graphs. Privacy, and I disagree with that because near intents can do it. So it says privacy swaps at 5% of total Thorchain volume would generate 20% of protocol revenue for the fee premium alone. The market is modeling zero revenue from this. So basically what AIXBT is saying here is that the Rune token, this Rune token is massively undervalued. And yeah, that could very well be true, but it's also got a pretty shitty history here. So just because it's undervalued and cheap doesn't mean it can't become cheaper. So take what AIXBT says with a grain of salt here. And so Citizen Vigilante, man, what a great video, a great movie, definitely worth a watch here. If anyone has, come across the British rape gang inquiry, basically, Islam is spread through the sword and through rape. So, whether Western civilization is going to stand up to that or not remains to be seen. That's probably why in Germany they're banning, and in Europe they're banning Citizen Vigilante. Okay, Zero Hedge, Goldman, Delta One Head. So Delta One is one of their trading desks, and his name is Rich Privorotsky. So this guy, I've read a lot of his research. He's brilliant. And let's just read this quote. The market's central premise has been that compute is scarce, right? So we're talking about AI compute again here. So if scarcity persists, prices should remain firm and justify continued capex. If supply rises, if compute supply rises, and rental prices continue to drift lower, that is a direct challenge to the shortage narrative. The first place that pain shows up is hardware. So semiconductors, right? So this compute index rolling over in the last couple of days is worth watching. The beneficiaries are the companies selling the complete platform and monetizing usage rather than simply selling picks and shovels. Which businesses are selling picks and shovels? NVIDIA, Micron, SanDisk, Samsung, SK Hynix, these companies that are selling the hardware when compute is no longer scarce. you don't need to buy chips from them. So that's a problem because their equity valuations have gone parabolic. Okay. So if there's even a hint of a problem with Micron's earnings report tomorrow, that could mark the toppy top. So we gotta. It'll only really be clear in hindsight, but this is starting to get. It's super frothy here. So let's continue reading this. My working conclusion. This is from Rich Provoratsky over at Goldman Sachs Delta One desk. He says, my working conclusion remains that hyperscalers are the structural winners through this phase. The first moment they demonstrate that they can deliver equivalent output with lower spend, the market will reward them. The bigger risk sits further upstream in the hardware and infrastructure stack, where expectations remain built around persistent scarcity. So he's saying that the companies selling picks and shovels, which are, for all intents and purposes, the hardware manufacturers, are going to get hurt if compute becomes less scarce. Whereas the hyperscalers buying the hardware to create the compute, if they start scaling back their CapEx spend, they will get rewarded for doing so. I think that there's probably a period of pain before they get rewarded for doing so, though. So let's see here. This is kind of cool. A web scraping tool, not bad. Prop firms on Hyperliquid. This is exactly what I'm building. I'm building a prop firm directly on Hyperliquid. So I think it's worthwhile for us to take a look at these. So another prop firm just launched on Hyperliquid. Meet. This is so cool. So I think it's probably a good idea for me to turn my trading stack into just a prop firm that anyone can hop into and trade with. This is brilliant. I'm going to go ahead and bookmark this. All right, let's continue on here. And I'm getting political content popping up in here that I thought that I had muted. So let me see if I go. Yeah, I had muted the politics stuff, but it says that I'm still getting it. So, all right. Let's see here. This is translated from Mandarin. So it says, sharing a somewhat dangerous project. Reverse engineering used to be an exclusive skill of security experts, but now someone has turned it into a skill package and fed it directly to AI. Reverse skill. Oh man, this is brilliant. Okay, so this allows you to reverse engineer. Oh, this is so cool. Awesome. I'm definitely bookmarking this. All right. Okay. So yeah, BitTensor Tau. There's all of these, subnets on BitTensor Tau, and they're basically like businesses. They're like little businesses on the BitTensor Tau mainnet. And, I think that there's a use case for them, but, they're businesses. So that means they need to be revenue generating. They need to generate a profit for stakers. So if you're holding Tau and you stake your Tau to receive an alpha token, that alpha token is almost like a share in that subnet. The subnet's a business. It's almost like you're buying shares in a business, kind of, sort of. And so that means that business needs to be profitable so that your alpha token goes up. If it's not, then, or the tokenomics are broken, then there's no reason for you to stake your Tau. So yeah, these subnets, basically we need subnets on BitTensor Tau because this is decentralized AI compute. So I really, really like the BitTensor Tau. I like BitTensor Tau as an idea. So this is from that Citizen Vigilante, where he's talking about, these activist judges who are releasing criminals back onto the streets. Okay, let's see here. Yeah, so check it out. This is about GLM 5.2 versus Opus 4.8. So GLM 5.2 is the open source AI model, the Chinese open source model, whereas Opus is, or open weight model, whereas Opus is, Anthropic's, Claude Anthropic's, frontier private model. And GLM 5.2 is better than Opus 4.8. And if you run GLM 5.2 locally, it's free, man. So your tokens cost you nothing. They cost you whatever the hardware cost you. So Yeah, Anthropic's got a big problem, and so does OpenAI. Both of those labs have big problems because they're valued at $1 trillion privately, and they're about to go public and raise a ton of money. And so if they go public, which it looks like they will, that's a liquidity event for all the VCs who have been funding all of this build out of OpenAI and Anthropic. But if a Chinese lab can release a model that is superior to the frontier models from OpenAI and Anthropic, and the Chinese lab makes the weights, they're open source, it's open weight. So they basically completely destroy the business model for OpenAI and Anthropic. This is a really big problem. I don't see why markets aren't selling off on the back of this. I think they probably will eventually. So yeah, GLM 5.2, man, is amazing. And I've actually got it running right now, working for me. In fact, I could take a look at it over here in Cursor. Let's see, did it finish working? Yep, it just finished working. It built and deployed an update to my trading agent over here. So that trading agent, let's just take a look at this real quick. So let me hit a hard refresh on this. And this is the trading desk. So Runway is the name of the agent, the name of the app. I think I'm going to turn this into like a prop firm or something like that. But let me see. Maybe I need to sign out here to see the updates to it. And then here's the homepage for Runway. The URL here is getrunway.trade. And one thing that I've got to do is improve the speed of this. It's very slow because I've just been working on features. I haven't been working on the speed of everything here. So yeah, this is super, super cool. Let me just go ahead and sign in for this thing real quick. And hopefully everything is still working for my sign in. I think that it will. There we go. Awesome. And so here's the trade desk. It looks like it may not have actually completed the update that I wanted it to. Drawdown breakers. Yeah, I don't think that it actually completed the update that I wanted it to. So basically what I wanted to do was I wanted separate tabs. I wanted separate tabs for everything here. I wanted the dashboard to be separated by directional trades, spread trades, testnet, and mainnet. So 4 separate dashboards so that everything's not combined into one. It looks like it failed to properly do that. So I'm going to have to go back through that after the call. But call's not over. So we got another 45 minutes. I want to run through and take a look at Micron. Okay. So Micron reports earnings tomorrow. And, it's going to be a really important earnings report coming out of Micron. I wonder why this is taking so long to load. There we go. So this is the big memory manufacturer. And just to refresh everyone's memory here, no pun intended, if you take a look at Micron over here, it's down 11% today. And looking like, it hasn't broken down yet. So structure has not broken down here. So just because it's off 10% today, it hasn't broken support. So it's still up and to the right. And they report earnings tomorrow. And the expectation is that they're going to blow it out of the water. If they miss, then I think the NASDAQ has problems because semis make up like 20% of the index now. So this is one of the really, really big semi plays out there. And if Micron misses tomorrow when they report, it's going to drag everything else down. So if we take a look at just the NASDAQ today, down 2.7%, but that's not really that big of a deal. I mean, it's had a big run. So a little bit of volatility creeping back in, with the VIX, still the VIX is, got rejected at the 200-day moving average. It's not even trading at 20. So we're really not seeing massive volatility here, even with the Asian markets, moving sharply lower. It's still, this is like normal type volatility after a run like this. So a lot hinges on what we get from Micron's earnings tomorrow. Let's take a look at this. And let me know.
Modern data.
Let me know if you guys can't hear this.
center, infrastructure operates at a physical scale that was once reserved for heavy industrial utilities. This chart tracks Micron's stock. From $92 in May 2025, it cleared $1,211 by June 2026, crossing a $1 trillion market cap. The right axis maps the catalyst, hyperscaler capital expenditure. As this spending crossed $700 billion, Micron's valuation tracked it. The underlying financials support this surge. In fiscal Q2 of 2026, Micron reported a 196% year-over-year revenue expansion, pushing its gross margin to 74.9%. Market expectations for the third quarter projected these metrics to accelerate even further, with analysts forecasting a 1,000% surge in earnings per share. We have to determine if this growth represents a structural shift in how semiconductor markets operate, or simply the peak of a highly leveraged capital cycle. This friction exists because of a physical limit in compute known as the memory wall. Generative AI has reached the point where the speed of data storage is now the primary factor limiting the speed of the processor. The memory wall occurs when AI accelerators process data faster than traditional memory can supply it. The processor sits idle, waiting for information. This bottleneck became critical as workloads moved from basic training to multi-agent reasoning. These tasks require massive real-time memory bandwidth to build complex chains of logic. To solve this, Micron developed its sixth-generation high-bandwidth memory, or HBM4. HBM4 integrates control logic onto a logic die at the stack's base via a 2048-bit bus interface. For NVIDIA's Vera Rubin, this delivers 2.8 terabytes per second of bandwidth, 11 gigabit per pin speeds, and 20% lower energy per bit. By integrating control logic into the stack, memory functions less like a passive bin and more like an active coprocessor, essential for the execution of reasoning models. To understand why this technology drives such high margins, we have to look at the physical constraints of the manufacturing floor. Every semiconductor fab has a hard cap on its monthly wafer capacity. When a company chooses to build one product, they are physically unable to build another. HBM is particularly resource-intensive. Manufacturing one HBM module requires 3 to 4 times the wafer capacity of standard DDR5. Producing HBM for AI data centers leaves the industry with fewer wafers to supply the standard memory found in PCs and smartphones. This trade-off resulted in a 4.9% global supply deficit in DRAM for 2026, the most severe hardware shortage in 15 years. A hardware deficit of this scale allows a manufacturer to dictate pricing. Because of these shortages, Micron's entire HBM capacity...
Okay, but we've seen this movie before, you guys. We've seen this before. Like semiconductors. So in 2000, I was 10. Okay, I wasn't trading in 2000 during the dot-com bubble and subsequent crash. And there have been a previous, semiconductor boom and bust cycles. There have been semiconductor bubbles in the past, right? So this has happened before. And every time this happens, it marks a top every time. So, for the people out there that are saying that this time is going to be different, I just don't think so. And so, when I take a look at guys like Warren Buffett, who have been liquidating stocks, selling for the last, year or two, raising, huge mountains of cash, he's smart, man, because he's got, he's like almost 100 years old. So he's got 8 decades of experience in the markets. He's seen these things before. He's seen this movie, 5 times. He's seen every boom and bust cycle for the last 8 decades. So, when you see investors like Buffett and, many other investors who have, been in markets for greater than 3 or 4 decades, and they're talking about, hey, this is a problem, this marks a market top, I tend to heed their warnings. So I think it makes sense if you're holding stocks to start to realize gains, take profits. No one ever got hurt by booking a profit. And you know what? If there is, it's a midterm year. Midterm years are usually, if not negative, not super positive. So, gotta just we got to be able to square the circle here.
Is fully sold out through late 2027 under binding long-term agreements. These agreements provide the company with fixed volume commitments and high demand visibility, trading away short-term price spikes for long-term stability. The physical limits of wafer production created an undersupplied market, pushing Micron's projected gross margins toward 81%. Because high-performance hardware is a finite resource, AI developers are moving to secure their supply chains through formal strategic alliances. In June 2026, Micron entered a comprehensive agreement with the AI research lab Anthropic. The contract acts as a supply lock, guaranteeing Anthropic the specific hardware it needs for long-term compute scaling.
Okay, so we've learned so much about these AI models today just going through my X feed. Well, Anthropic, where are they getting the money to commit to buy these chips? Because they don't make much money. Like $30 billion a year is, $30 billion, I think, is their top line revenue. Like, that's top line. And we're not talking about profit. We're talking about top line. So how can they make such a commitment to buy these chips from Micron, right? So when you see these commitments from a lab like Anthropic or OpenAI, and yet you also know that there are Chinese labs that are putting out models that are better than the frontier models from OpenAI and Anthropic, and those Chinese models are open weight, which means you can run them for free on your own hardware. So, that's a huge problem for Anthropic and OpenAI, right? That is undercutting their entire business model. So what happens when the market wakes up to that fact and starts to reassess whether these commitments in terms of spending from Anthropic and OpenAI buying these chips, are these commitments going to be realized, or are they going to have to back out of these contracts to buy these chips because they won't have the money to do it, So big problems with this. And we've seen this movie before. We saw it in 2000. It's the same thing.
The partnership also includes a co-design pillar. Engineers from both companies work together to optimize the thermal performance and token economics of the cloud models at the silicon level. These infrastructure requirements extend beyond the processor. Training and serving models at this scale requires high-density storage for massive data lakes. To handle agentic workloads, Anthropic uses the Micron 9650 SSD, delivering 28 gigabytes per second. For persistent key-value caches, they rely on the 6600 Ion SSD, providing 245 terabytes of capacity in a single drive. These deep integrations mean hardware manufacturers now influence the physical architecture of the software models themselves. Fulfilling these long-term contracts across the global AI supply chain requires a massive, synchronized expansion of physical manufacturing space. Micron is in...
Right, physical manufacturing space. And also, the data centers, where do you plug them in? Like what? You're going to plug these things into the grid in the United States? Are you kidding me? The answer is no, it can't happen. And people are pushing back because if data centers are pulling massive amounts of data from the grid, you know what that does to the price of electricity? Up, number go up. People don't like to pay more for their electric bills because fucking Amazon built a data center down the street. And what about water? They pull a ton of water. So these data centers, and they become obsolete quickly. These data centers, they only make sense to build in space. That's why I think SpaceX is going to be the most valuable company in the history of the world over the next 5-10 years, irregardless of the fact that it launched at a stratospheric valuation, with its IPO. I mean, that thing, what Musk is building, no other company on the planet can compete with that. So, yeah, I mean, would I buy SpaceX here, though? No, I think it's overvalued. There's probably going to be some type of correction. But yeah, there's nowhere to plug these data centers into. There is no power in the USA. And the time frame to bring that power generation online is measured in years and years. And the most efficient way to do it is with small nuclear reactors. But good luck getting those things built quickly. And markets don't work in terms of like years and years in the future. Markets want to discount cash flows 6 or 12 or 18 months out, not 3 or 5 years out. And so if these data centers can't be built because there's no power, then these hyperscalers are going to have no choice but to curtail their capex spending. And that means that all of these so-called commitments in spend with memory manufacturers like Micron and SanDisk and Samsung, those are going to get cut. So, yeah.
Investing $50 billion to build a new megafab complex in Clay, New York. The engineering firm Bechtel is managing the construction, which is supported by billions in federal...
Yeah, when? You know, so are we talking about this has been announced and we're going to build a data center maybe at some point in the future, and like this stuff is not actually being brought to completion? Like most of these projects are still either, you know, far away from being completed or haven't even broken ground. So like this is just a narrative that has been spun around AI data centers being built out. It's not real. Like the stuff has not been built because it can't be built because there's no power. You can't power the computers and you can't cool them because there's no water. So like, what? It's not real, man.
CHIPS Act grants and state incentives. Parallel expansions are underway in Boise, Idaho, aimed at bringing more capacity online by mid-2027. However,
yeah, did you hear that? Aimed at bringing more capacity online by mid-2027. It did not say aimed at bringing it to completion by mid-2027. It just said more capacity online. So that means, who knows? What exactly does that mean? Does that mean that, you know, there's going to be one server rack that's turned on? Because that would technically be more capacity online. It doesn't mean that they brought the data center to completion. And you see in the you know, part of the screen here, the power cables and the nuclear cooling towers here. We don't have those. There are no small nuclear reactors being built. I think there's like a handful of them. You know, that's why nuclear was such a big deal with those, you know, there were a bunch of US government investments in nuclear, but it's taking too long. Like, you know, markets work in quarters and pull forward earnings 18 months from now. It's a discounting mechanism. But if it takes years and years to, you know, build the physical infrastructure to power these massive, you know, land-based data centers, I mean, markets are going to punish these stocks well before this stuff gets brought to completion. SpaceX is the solution. You know, putting the compute in space, it solves the cooling and it solves the power. So, yeah, I think SpaceX is going to be the big winner here.
The global memory market is a consolidated oligopoly, and Micron's rivals are moving just as fast. This breakdown shows the global HBM revenue share for the first quarter of 2026. SK Hynix remains the leader, holding 58% of the market and reporting a 72%. This creates a dependency loop. Memory makers are spending tens.
Okay, so is SK Hynix Korean or Chinese? It's so Chinese. Is SK Hynix Chinese? It's from China. I don't know. Is it? I think it is. Or maybe it's Korean. I'm not sure. I'm finding out right now. So I don't need deep dive research on this shit. All I want to know is SK Hynix Korean or Chinese? So let's find out. Is SK Hynix Chinese, or is it? And just turn it on flash, man. Just turn it on flash. There we go. Let me go. Flash. Okay, it's South Korean. Got it. South Korean. Okay. Good. So let's bring it on back to the video content.
Of billions on fabs because cloud providers are spending hundreds of billions on hardware. This timeline maps the dates these new mega fabs come online against the projected curve of AI infrastructure demand. If a major cloud provider reduces its infrastructure guidance, the market will face a severe capacity oversupply. In an
Uh-oh.
oversupply scenario, memory prices fall sharply, leading to a derating of the stock and a compression of its price-to-earnings multiple toward
See?
historical levels.
Right.
The role of memory in the data center has shifted toward a more active architecture, but these trillion-dollar valuations still balance on a knife edge of capital expenditure that must eventually find a stable, long-term balance.
Yeah, seriously. Like, this is a big, big risk. And it's not like we haven't seen this before. We've seen this same movie play out before multiple times. And the guys who have been in markets for decades and decades know this. And that's why they're raising cash. So the problem with raising cash is that, if we just bring it on back over here, I think there was a CPI print today. Was there? It's Tuesday, so you get CPI. So I'm going to say US CPI. This is the absolute index year on year, trimmed mean year on year. So here's the thing. What in the world does trimmed mean? And US CPI, I want to take a look at the median year on year. So this number is such bullshit. There's no way. And number one, here's why it's bullshit. Because if you take a look at US PPI, this is the producer price index. This thing is going straight up, and even this is bullshit. You know how I know that? Because I buy something called groceries. You know how much since 2020 a McDonald's Big Mac has increased in price? 150%. You know how much most items in the grocery store have increased in price since 2020? Like 100%. Some of them by as much as 300%. And you get less in the package. So inflation, I'm sorry, is not running at a 4% clip. Inflation is running much, much hotter than that. And so why am I talking about inflation? Well, because if you're going to sell stocks and raise cash, then you're going to be holding a wasting asset, which, is inflating away, and not inflating away at 4%. It's going to be inflating away at, probably 10%, something like that, maybe even hotter than that. So yeah, the inflation readings are just, they're a fraud, and intentionally so. Because they've changed the way that they're calculated. If inflation was still calculated the way that it was back in 1980, I bet you that we never would have seen the, contraction in the rate of inflation after that massive increase in money printing in 2021 and 2022. Okay, so the next one here is T-RIZE. T-RIZE. So this is one of the ones that I think Mike wanted to take a look at here. Institutional RWAs. Okay, but it's that shitty version. Okay, well, let's just take a look at this. This will probably be interesting here. T-RIZE. Oh, you know what this one is? This is RWAs on Canton. That's what this is. Yeah, this is cool. So, Canton is eating, institutional DeFi TVL. It is going to become, Canton is going to become the institutional chain. And it already is, so it's just going to continue mopping up that institutional TVL. And with Zenith going to mainnet pretty soon, we're going to see EVM chain dApps on Canton on Zenith subnets. Awesome. And now with this T-RIZE, we're going to see, more RWAs on Canton. So let's watch this.
Have you ever actually thought about how Wall Street's massive, clunky, old school assets are going to make their way onto the blockchain? Well, today we're diving into an absolutely incredible piece of financial architecture. I am genuinely thrilled to introduce you to T-RIZE. It's essentially this highly engineered bridge directly connecting traditional institutional finance with decentralized blockchain rails. And we're not just looking at some theoretical whiteboard concept here. No, This is a live, end-to-end tokenization lifecycle machine, literally reshaping markets right now as we head into 2026. Okay, let's lay out a quick roadmap so we can see how all the pieces of this puzzle fit together. First, we'll look at tokenizing real-world assets. Then, we'll dive into their dual network engine. After that, we'll break down the RISE tokenomics investing, unpack the value capture flywheel, and finally, look at how they're navigating legal compliance. Let's get right into it.
Right, so there's a token for this one. I think it's the RISE token. And I'm pretty sure that the RISE, R-I-Z-E token, yeah, I think this, I'm pretty sure this is the one. Yeah, it had a big, another plus 30% move today. Wow. So, this could be a diamond in the rough. I'm going to go ahead and add this one to my watch list here, and I'm going to bring it up to the top. This one is going to go above Arrow. Here we go. Let me bring it back to the video content. Actually, before I do, I've got to find out, can I buy this thing on an EVM chain? And to figure that out, I'm going to hop to Coin Market Cap, RIZE. I think this is, I'm pretty sure this is the right one, RIZE. It should be plus some, so yeah, plus 30% today. Okay, this is the right one. And now I want to go to markets and then DEX. Okay, so I can't. There's no Uniswap v4. Why is it showing me that there's a Uniswap v4 pool, but when I click on DEX, there's no, it doesn't show up. Perpetual, futures, spot, all. So yeah, there's an Aerodrome pool. That's right. This is on base. So, oh, that's right. We were looking at this on Aerodrome yesterday. Aerodrome. So if we just hop on over here and, I want to take a look at liquidity, and we're going to type in RIZE. Let's see if the volumes are still where they were. So, oh my God, 1.4 million. So the volumes have been kept, wow. So, and the TVL's tiny. This is still a good, this is a great pool, man. I knew I should have entered this thing. So as long as the volumes remain where they are, this pool is profitable. The only way that you can make money as an LP is if the volumes are stratospheric, or if you've got two assets in a pool that are basically the same thing, so they don't move against one another. Therefore, you don't generate any gamma. You don't have any impermanent loss. And that means that whatever fees you generate are your profit. But if you're paired with a stable coin, then your gamma is crazy high. And so if you've got crazy high gamma, that's your cost of volatility. That's your impermanent loss. If your volume in the pool is not super high to generate a ton of fees to be greater than whatever your cost of volatility is, then you're not profitable. And also, you don't have a positive variance risk premium. So you need a ton of volume in a pool for it to be profitable. And this is an example of a pool that I think is profitable. So let's bring it on back here to the RISE deep dive.
Section 1, tokenizing real-world assets, the institutional pipeline. To really grasp what we're talking about, we have to understand the sheer scale of the real-world asset transition that's happening right this second. The global real-world asset sector, or RWA, is estimated at a staggering $16 trillion. $16 trillion. That is exactly the massive market share T-RIZE is aggressively going after. We're talking physical commodities like gold and oil, digital corporate bonds, global real estate, the whole shebang. This isn't just some niche crypto project. It is a massive global upgrade. And to put their current momentum into perspective, T-RIZE already boasts over $2 billion in active transactions in their pipeline. $2 billion. They are literally taking these heavy traditional assets like structured private credit and commercial real estate and completely modernizing them. They're making sure these old school assets actually align with strict modern institutional standards for risk, transparency, and liquidity on the blockchain.
Liquidity.
Section 2, the dual network engine, Canton versus RiseNet. So how on earth do they process this massive financial pipeline? Well, they use a really unique dual network infrastructure. Let's contrast the two systems. You've got the Canton Network, which handles the highly regulated transactional execution and primary issuance. Think of it as a privacy-first institutional vault. Then, on the flip side, you have RWA. This is a custom Avalanche Layer 1 subnet acting as the fast finality engine. It's built specifically to power complex, decentralized machine learning risk analysis for all these newly tokenized assets. The really crucial point here is that RWA's analytical outputs generate something called a RWA score, or Canton score. Basically, it evaluates risk and optimizes collateral ratios by processing on-chain transaction data, mapping out relationships, and then submitting tamper-resistant hashes right to the ledger. You can think of this RWA score as a highly advanced, decentralized credit score for tokenized assets. It gives investors real-time, optimized risk evaluation so they know exactly what they're holding at any given millisecond. Pretty wild, right? Section 3, RWA tokenomics, investing, the fuel. Let's talk about the fuel of this entire machine, the RWA token. It's an ERC20 utility asset, and it has a strictly capped maximum supply of 5 billion. No more can ever be created. So how is that 5 billion allocated? If we think about the major categories like the 30% for the governance treasury and the 14% for the T-RIZE team, you'll realize they enforce multi-year cliffs and linear release schedules. This isn't random. It's a very deliberate design choice to prevent early sell pressure and completely lock in long-term ecosystem security. But here is where it gets really fascinating. Instead of just locking those tokens away in a smart contract where they do nothing, T-RIZE issues these locked allocations as specialized, non-fungible, bonded governance NFTs. It's kind of like a time-locked savings account that actually lets holders participate in network consensus and governance decisions from day one, even while their underlying tokens are technically still vesting. Over time, the tokens inside these NFTs accrue what they call maturity. Now, if a user decides they want to liquidate early, they have to go through a very specific unbonding process. First, they initiate a strict lockout period. Then, the governance NFT is burned, and the liquid tokens finally hit their wallet. But here's the kicker. They completely forfeit all of their accumulated maturity. This is an absolutely brilliant security measure. It ensures voters always have real long-term skin in the game, protecting the network from things like dangerous flash voting attacks or hostile takeovers. Section 4, the value capture flywheel, the economic engine. This brings us to the value capture flywheel. How exactly does T-RIZE safely harvest capital from its multi-billion-dollar pipeline? Well, platform fees are generated from tokenization structuring, decentralized machine learning inferences, and lifecycle admin tasks. But here is the absolute genius part. 100% of these platform fees completely bypass the T-RIZE corporate balance sheet. Instead, they are programmatically funneled straight into the community-owned governance treasury. And those locked tokens we just talked about, they tie directly into this treasury system. In the T-RIZE ecosystem, time literally equals power. The voting weight of a bonded holder isn't just determined by how many tokens they have, but by their accumulated maturity. Basically, a holder who maintains their bond for the full 36-month maturity window gets a massive 3 times the voting influence per token compared to someone who just entered the ecosystem. Using that amplified voting weight, the bonded holders are the ones with the sole authority to deploy the treasury capital. They direct it into 4 key areas: underwriting research grants, funding liquidity subsidies on decentralized exchanges, creating asset insurance reserves to backstop private credit pools, and supporting validator node incentives. It is a completely self-sustaining feedback loop. As the platform scales, it literally funds its own expansion. Section 5, navigating legal compliance, the shield. Finally, we have to look at the legal shield. How does T-RIZE navigate the incredibly complex and sometimes scary intersection of institutional banking laws and decentralized governance? Well, they explicitly position themselves strictly as a technology provider. They leave all the heavy lifting, KYC, compliance, distribution, custody, entirely to licensed third parties. By stepping back and acting purely as the tech layer, they brilliantly avoid acting as an unlicensed financial intermediary. But how do they legally protect the treasury itself? By building a massive structural wall between the entities. On one side, you have the T-RIZE Group. These are the technology developers with their own corporate balance sheet. On the completely separate other side is the Carbon Zero Foundation. This is an independent, nonprofit foundation that legally holds the governance treasury and represents the decentralized governance structure. This deep legal separation is what protects individual token holders from personal partnership liability. And this exact structure is why the RISE token avoids being classified as a security under financial regulations. It intentionally fails the expectation of profit leg of the Howey test, because individual token holders have absolutely no contractual right to claim a slice of the Treasury's assets for personal income. And because governance votes are legally directing a non-profit for the public good, the token maintains a robust, highly compliant regulatory structure. So I'll leave you with this to ponder. As the massive $16 trillion real-world asset market rapidly moves on-chain, is this precise, sophisticated financial machine, with its dual networks, maturity-adjusted voting, and highly shielded legal structures, the exact blueprint required to make the future of global finance a reality? Thank you so much for joining me for this explainer, and I'll catch you in the next one.
Okay, so we got a guy in the chat right now that I would love the opportunity to address. And he's saying that he turned $300 into 10K using DeFi Tuna, and he's full of shit. He's lying. And I see this all over the place. Lucas does this. Alex does this. The strategy doesn't work, man. So here's what he's saying to do. He said, try it yourself. Brother, I fucking pioneered that strategy. The DeFi Buddy has a calc? Of course. How did I know he was going to talk about DeFi Buddy? Bro, the shit's not real. It's a lie, dude. It's not real. So, it pisses me off too, because, we get people who say like, oh, I turned $300 into 10K with a hedged CLP strategy. It simply doesn't work. And if it did work, bro, I would love to be proven wrong. Hop on the live call right now and prove it. Show me your verified on-chain results. And you know what he just said to me? I don't want to waste my time. I can, but I don't want to waste my time. And the reason why is because he's lying. It's not real. The DeFi Buddy calculator is bullshit. Alex and Lucas are full of shit, and the strategy doesn't work. If you provide concentrated liquidity, I'm surprised you aren't hip to this. Bro, I was the one who built it. I built it and I taught them how to do it at Crypto Labs Research. I was the one who came up with the idea for that fucking DeFi Buddy software that he ended up renaming to DeFi Buddy, okay? Like, I was the one who built it, dude. So, it's not real. And here's why. When you provide concentrated liquidity, Solana paired with a stable coin, that is an impermanent loss factory. You've got a ton of gamma. And so because you've got all of this gamma risk, the fees that you generate must be greater than your impermanent loss. That is almost never the case. You don't have positive variance risk premium when you provide concentrated liquidity in 99.9% of pools out there. And so what that means is you've got a ton of impermanent loss, and then it gets even worse when you try to hedge it. So if you borrow against your LP and then use that as a hedge, well, all that's going to happen is if the token pumps, then you are going to realize that impermanent loss against yourself on the way up. Because your liquidity pool, when you're paired with a stable coin on the way up, you exit the outperforming asset and enter the stable. So you become less long in the LP on the way up, but your hedge is static. It's got static deltas. So on the way up, your LP becomes less long, but your hedge is still static short. And so you become on the way up within your range more and more and more short, until eventually when you go out of range on the upside, you're just short. So you're realizing that impermanent loss on the way up. So, the reason why this guy in the chat, Gabriel 33, can't come on the live call right now with me and prove the results that he claimed in his chat is because he's lying. And I wouldn't be surprised to learn that this is actually someone that works for Lucas at Crypto Labs Research. He's lying because, hey, you know what? If you were really able to do $300 into 10K with that strategy, which you didn't, then you would have no problem hopping on this call right now and proving it. And the reason why you can't hop on the call and prove it is because you're full of shit. It's not real. And that strategy of hedging a CLP with a borrow position or with futures, that strategy does not work. You know how I know? Because I pioneered it and I ran it myself, and I wasn't able to get it to profitability because it's structurally unprofitable. You see, the big problem here is that the core of the strategy, the concentrated liquidity provision part, that part is structurally unprofitable. You do not have a statistical edge. In fact, you are extremely likely to only lose money over time as an LP because you have no positive variance. So yeah, man, it pisses me off because there are so many people who fall for that stuff that Lucas and Alex put out about, hey, you can make 3% per month or 5% per month. Brother, it's not real. It's a lie. And they know that. They know that it's a lie, but they continue to put out marketing material. And so does Jake Call. He does that shit too. So like, these guys put out this marketing material talking about liquidity pools as if they're profitable. They are not. The only time a liquidity pool is profitable is when you got something like this shit, this RIZE coin, which now that I know a bit about it, I am not bullish on RIZE. But the only time providing concentrated liquidity is profitable is when, take a look at the size of the TVL in this pool on Aerodrome. Very, very small, 45,000 TVL. Look at the volume though, $1.5 million in volume. The only time providing concentrated liquidity is profitable compared to holding is when the TVL is small compared to the volume and the fee tier. So this, 7,000% emission APR, and again, this is misleading too, because this emission APR, this is one tick wide. So what that means is, if you set your range the most narrow you could possibly set it, yeah, you would generate this emission APR. But for what? Like 5 seconds? You won't be able to keep it in range. And your impermanent loss, when you make your range more narrow, it magnifies your gamma exponentially. So your impermanent loss becomes orders of magnitude greater when you set your range more narrow. Now, the fees have to outpace that gamma, that impermanent loss. But if the volumes in the pool are not stupid high like they are in this pool, then your fees, that's your theta will not be greater than your gamma. And so your theta, that's your fees. If it's not greater than your gamma, your impermanent loss, then you are not making money compared to holding. And so what that means is you would be better off doing nothing, just holding the coin. You would lose less on the way down and make more on the way up. So, yeah. And he says, I don't have impermanent loss. Brother, you don't understand what you're doing, man. And DCAing in, dude, dollar cost averaging in using a liquidity pool is a horrible strategy. You're much better off just buying the asset that you want to hold spot. And when you say you don't have impermanent loss, Gabriel, unfortunately, bro, impermanent loss is structural to liquidity provision. And you're laughing because, well, okay, bro, look, I know this shit backwards and forwards. And I would love the opportunity to have you jump on the live call and prove it. Prove it, man. Because, hey, if I'm missing something here, I want to make some money too. Here's the problem. You can't hop on the live call because you're full of shit, bro. So give me a hint. Give me a hint, man. Yeah, Gabriel, give me a hint in the chat. I love this stuff, dude. Because you're talking about DeFi tuna hedges, and it's like it looks so seductive on paper. And then, you probably pop it into Lucas's bullshit calculator. And, it's not real, bro. My energy is shit. Okay, so I'm telling you to prove your results. I'm telling you, if you're saying that you're generating these results, prove it. And you can't because you're lying, okay? It's that simple. Yeah, bro, like, Gabriel, go fuck yourself. Fucking lying shill for Lucas in the chat, man. God damn it. But all right. So Speaking of shilling, why don't we go ahead and bring it on back to the node.pro, the website here. And, look, if you want real free DeFi education, no cost here, then hop on over to the node.pro and hop into the Learn tab. Now, Gabriel, you would get a lot out of this, man. Instead of paying Lucas, $1,000 a month for bullshit, what you could do instead is you could hop on over to the node.pro and you could jump into the free course material that I put together. I built all this, man. I wrote the book. I literally wrote 5 books on this stuff, dude. So you know what you could do? You would get a lot of value out of this, Gabriel. Go to the concentrated liquidity provision course. And when you do this, start with lesson 1. Okay, you got to understand AMM fundamentals before you can start providing concentrated liquidity in a Sol USDC pool on DeFi Tuna, borrowing against it, thinking that you're delta neutral. You are not. Thinking that you don't have impermanent loss. That's not true. Impermanent loss is structural to those concentrated liquidity provision products. Those pools, they are a derivative product. And so the gamma, it's basically an option. The gamma is structural, man. So you're not escaping it. So exactly. James, thank you, man. Look, dude, I want to make money with this. If this dude, Gabriel, has some brilliant strategy that somehow I missed, he doesn't. But if he did, bro, you can hop on the call and you can prove it. This shit's on chain. You can show the receipts. If you took $300 and turned it into 10K, yeah, of course I heard of the UIG. I fucking built that shit, brother. Dude, I was the guy who built that entire thing with Lucas, man. Yeah, Lucas Rubix fucking sucks, bro. That guy is a straight up piece of shit, bro. So, Gabriel, what you should do is you should hop into the free education here at the node.pro. And yeah, this is what you should do, man. Go through the free education, go through the exercises. Look, no, it doesn't work wonders, man. It doesn't. You're lying, dude. How do I ban people out of this chat? If this guy won't hop on the call to prove it, and he's shilling something that I know to be a scam, how do I ban his ass? Can I ban people on YouTube? Is that something that I can do? I want to ban him. Gabriel 33. How do I ban this dude? Because look, man, if you're not going to prove it, then I want you to fuck off. Bro, I'm here to make money and not have to have liars in the chat like you, man. You're just lying, shilling a scam product for people who are, I'm going to be generous here, ethically dubious, okay? I think that he's a piece of shit, that guy Lucas, all right? But ethically dubious is the more diplomatic term of art there. So maybe what you should do, Gabriel, is hop into lesson 3 and take a look at impermanent loss and risk fundamentals so that you can learn the hidden cost of high APYs. Yeah, bro. So yeah, he is a paid shill. So he's really, yeah, James, you're right. This guy, Gabriel, is a paid shill. How do I, okay, maybe I just put him in timeout. It looks like I've got on my StreamYard, I can put this user in timeout. But honestly, it's entertaining for me. I enjoy seeing this guy just lie. He's flat out lying, man. No one gets into detail like those guys. Oh, Jesus Christ. Oh my God. Brother, if you want to build a skill set, no, don't ban. Jay-Z says he can have his opinion and prove him wrong. Okay, you're all good, man. I'm not going to ban you, Gabriel. I'm just going to call you full of shit until you hop on the show and prove it. But you can't because you're lying. So what you should do instead, though, is hop into the education and go through and learn about impermanent loss, okay? And you got to learn why this is structural to liquidity provision. Right, you're on a shitty laptop and your keys don't work. That's why. Oh my God, this is fucking great. you can't prove it because your keys don't work, and I want all this info right now. Like, what the fuck? Like, bro, this is hilarious, man. So full of shit. Like, dude, if I had turned $300 into 10K as a liquidity provider with a hedged LP, I would be screaming it from the rooftops and proving it with receipts. You know why I haven't done that? Because I pioneered that strategy, number one, years ago. And number two, it does not work. Okay? So, so not Scoop Boy, Scotty D. The UIG is a scam. And all it does is serve to enrich Lucas Rubix. That's all it does. So stay far, far away from the UIG, bro. Show you why. Why is it a scam? Because, bro, you've been told something that it's not real. It's not real, man. You're not making any money with it. You're just losing. And Lucas knows this. Lucas and Alex know this. They both know that this stuff is not real, but they continue to put out the marketing content claiming that you can make 3 or 5% per month. And it's a lie. And they know it's a lie. And they profit from that lie. That's why they're scammers, dude. That's why. Yeah, but he made 10K, James. Right. But he needs a new laptop. He doesn't have the keys. He can't prove it because, the keys and the laptop. Yeah, I can't hop on right now. I got to do the laptop. Maybe tomorrow. Brother, what you should do is, yeah, sure, man. So what you should do here is you should hop into the free education that I put out, man, and learn before you end up losing money, dude. Laugh my ass off, Jay-Z. No kidding. And now Gabriel's, I guess, direct messaging me. I think that's what private message means, PM. He said, ego is a hell of a drug. I don't know what that means, man, but I enjoy the banter, talking shit to someone who's lying, like you, dude. So what you could do, though, is hop into the concentrated liquidity provision course. Learn how liquidity provision works so that you can avoid losing money. Now, you might think that concentrating your liquidity within a narrow range, because it does generate more fees than providing liquidity in a full range V2 pool, you might think, oh, dude, you're so full of shit. He says now, and he's just a private messaging me now. He's not even, does anyone even see his comments anymore? He's not even making them public anymore. I think it's just in like a private chat or something. It's so frustrating. But here's the reason why this stuff doesn't work, okay? When you concentrate and you can learn about this if you go through all the free course material that I created here at thenode.pro and at defiuniversity.xyz. The reason why this stuff doesn't work and the reason why it's a scam, or at least extremely misleading, is when you provide concentrated liquidity and you concentrate your capital within a specific range, your gamma, that's your impermanent loss, also goes through the roof. And so when your gamma goes through the roof, your impermanent loss goes through the roof, then what you need in order to offset that and just break even is you need your fees, that's your theta, to be super, super high. And if it's not, then you lose money compared to just holding. And when people say, oh, I'm using the liquidity pool to dollar cost average into an asset, well, you're always better off just buying that asset outright. In fact, you would be able to buy more of that asset if you just bought it outright rather than using the liquidity pool. It is structurally unprofitable to provide liquidity in 99% of pools, and you will have more of that asset if you just bought it outright rather than trying to use a pool to so-called DCA into that asset. It does not work. And so, yeah, man, unfortunately, people take advantage of others' ignorance. So Lucas Rubix and Alex, they put out marketing content and create these products around liquidity provision that takes advantage of the ignorance of people who are getting into crypto. And so what ends up happening is they provide a bunch of liquidity. These brand new people, they join the UIG, they pay for this fucking DeFi buddy bullshit, and they start providing concentrated liquidity, and they lose money. And then they've paid for the software, they've paid for the UIG, and they've paid market tuition to lose money as an LP. So it's such a shame, because those guys know that it's not real. Those guys know this, but that's how they make their living, is by scamming people. So that's why I left. That's why I left. So I left Crypto Labs because of that. And yeah, so James, the space does move fast. It moves so fast that there are so many scammers 24/7. You're right, man. And here's the thing though, this stuff is on chain. So if those results were real, you would have no problem showing the receipts and proving it. But the fact that you can't show receipts and you can't prove it, I think that says all you need to know. Now, when is it profitable to provide concentrated liquidity? The only time it's profitable to provide concentrated liquidity is when you've got a pool like this. And I don't like RIZE. I wouldn't enter this pool. But the only way that and oh my God, so you're talking about so Gabriel, could you please post in the normal chat rather than the private message so that everyone can see it? Because, oh my God, this guy. So all he's doing now is in the private chat on YouTube, he's just like, blowing me up with messages. And he's describing strategies that I built years ago that I then discovered don't work, that Lucas and Alex took and ran with and created products that don't work. And I left Crypto Labs Research because I found out that Lucas is just a scamming piece of shit. You're seeing the comments, Jay-Z? Okay, good, man. Yeah, so I mean, he doesn't understand how these LPs work. And dude, you don't need to go to college for anything, Gabriel. You can totally, build a skill set just by going to the node.pro for free, or going to YouTube, dude. You don't need to go to college for anything, unless you want to go for the social experience. But I would really recommend that you go through my concentrated liquidity provision course. And unlike this bullshit that Lucas has put out, my stuff's free and my stuff's high quality. So take a look at my course, bro. You'll learn a lot. And the fact that you can't prove that you're generating returns that are positive, that's all you need to know, man. If you're in this to make money, well, then you should be able to prove that, right? If you're actually making money compared to holding, then you should be able to prove it. And the reason why you can't, and the reason why you talk about cash flow is, well, because that's a cope. It makes you feel better. But that cash flow that you think you're earning, that's your theta. The problem is that your gamma, your impermanent loss, is always greater than your theta. And so compared to just holding, you are losing, all right? Not making a penny, dude. And it's a shame, but if you had gone through my concentrated liquidity provision course, you would know that. So hop into the Intel library over here at the node.pro. This is free deep dive research. If you want to learn about these protocols and the tokenomics, importantly, of these protocols, you can do so for free over here at the node.pro. If you want an AI newsletter delivered to your inbox twice a day before the market and after the market closes, yeah, Gabriel, I don't like Lucas because he is a scammer. That's why I don't like him, dude. He knows that the strategies that he puts out don't work, and he continues to profit from that. he profits from the ignorance of people getting into crypto, dude. That is the definition of scamming, man. So the AI newsletter, this is high value. You can join our free community over here on Discord. And if you want premium live calls with me, you can do that also. That's 3 times a week, Mondays, Wednesdays, and Fridays. If you want to buy a shirt to support us, you can do that here at the store. I run private coaching. So maybe, Gabriel, you would benefit from my private coaching, bro. You should totally sign up. Dude, Lucas is a scammer who made millions of dollars from the coaching program that I built. Okay? That's why I hate his ass, because I built all of it and he took all the fucking money, bro. And all the strategies that I was working on, it turned out that they didn't fucking work, dude. And so when I brought that to Lucas, he wanted to continue to push that shit and I didn't. So I quit and I left Crypto Labs. That's why. So yeah, but I learned a lot, that's for sure. And at the Node.pro, if you want coaching where you can actually learn strategies that work, well, I'll do basically a 30-minute free discovery call with you here. And I've also turned that snapshot that I built into an API. And so if you want to build structured intelligence into your app, you can do that right here with the Node.pro API. Oh my God, dude. So I love this, dude. The Gabriel thing where he's saying, just trust me, bro. Just trust me. Dude. Yeah, man. So Gabriel, I wish you the best. I hope that you make all the money in your concentrated liquidity journey. When you start to realize that all you're generating is losses compared to holding, then we're open here, man. You can schedule a free 30-minute discovery call with me, and I can show you how to start making money, brother. But until then, we're 12 minutes over time, so I'm going to go ahead and cut the call. I really appreciate you guys for joining. Gabriel, I appreciate you for joining too. You made my day, man. You really did. So thanks, you guys. See you all tomorrow at noon Eastern and 9 a.m. Pacific. Everyone have a great rest of your day. And we're going to do the daily market wrap at 4 p.m. Eastern. So that's in about an hour and 45 minutes. See you all there. Have a good one.